Morning all, how we doing? Happy budget day. It's the day today. In the UK, we get the budget. It's a big one. Morning. Well, thank you for subscribing, Youssef. Didn't you subscribe yesterday? Welcome to the private streams, it says in my chat. Surely you have already done that. That's weird. Don't know why that's come up. Anyway, morning Danny, morning Paul, morning Travel, morning Church. Gregors, Sarah, Rodrigo, how we doing? Vitali, morning. So yeah, big day today. Budget day. The FTSE's already taken off this morning, straight up 1R, parabolic. So we'll see what happens today. It's going to be a big one. Possibly. Might not be. You never know. Morning, Ismet. Barrier Man, morning. This is what you look like, Barrier Man. That's you. That's AI's attempt at creating Barrier Man from the ECB press conference. That's what it came up with. Yeah, I don't want your pen. Go away. So yes, today is a big day. We'll have a look at the news, etc., etc. So overnight wise, not an awful lot of overnight news apart from the Aussie movement. Nothing much out of Japan again. They have mentioned FX a couple of times in the last few days, but there's nothing. I'm just seeing if there's anything else they've mentioned about FX today. Nothing particularly exciting by the looks of things. So Australian CPI overnight, which we'll have a look at in a second. But other than that, nothing really has happened. So today is obviously a fairly volatile day, potentially. So we've got today, we've had CPI for the Australian. It came out as forecast for the trimmed quarterly. The overall quarterly missed by 0.1. So they got what they wanted, which was the drop, or what they were expecting, which was the drop of 0.7. They actually got a 0.8, so slightly lower than forecast. The annual, they got wrong. And this is the one that it's hard to get this wrong, because this is your annual figure, which is made up of quarterly and monthly figures. So when you get all the quarterly and monthly figures, by the time you get to forecast the annual, you've got 3/4 of the information. So getting this wrong is actually quite difficult. But what we got was obviously a lower than expected, or bigger than expected, drop in CPI in the last quarter, which has obviously thrown the yearly out. So yearly all down, meaning that interest rates in Australia will finally be coming down. Fingers crossed. So we should see a drop in the interest rates in the Aussie next week, which obviously has made the Australian dollar rally. Normally you would expect the opposite, but I think what we're seeing here is obviously the market has been factored in, basically the expected interest rate drop and the inflation drop. So they've been expecting it to be coming down. So what we've actually had already is the drop. Yeah. So now they are taking profit on the drop before the next leg down. So obviously there's always two factors in play, but it looks like they've already factored this move in. So what we got overnight was basically not an awful lot, because the markets had already put that move in. So ADRs, as you can see, totally flat today so far. Nothing affected by the Aussie. We've got the German CPI this morning. Germany makes up roughly 50% of the Eurozone figures. So this is released in states. The German CPI figure, we usually get it somewhere between sort of 9 and 10:30 in the morning. We get it basically. So there's 6 German states which all declare CPI figures independently, and obviously this is the amalgamation of those 6 states. So once the 6th and final state has announced its CPI, we'll get the total figure there. Again, forecasting a bounce. We are expecting this for the euro. No reason why the Eurozone CPI shouldn't bounce, because it's been dropping nicely, so therefore you tend to get a bounce afterwards. So with the CPI, you'll see these figures state by state being released on Financial Juice as they're announced. I don't think we've had any. So you'll see like Bavarian CPI is X, Y, Z. Obviously that will potentially move the market for the euro this morning. We've got the SNB chairman speaking this morning as well. So potential for some kind of information coming out about what the SNB are planning. And then obviously we've got non-farm employment and GDP. And we have also got the budget, which is around about, I think it's 12:30, something like that. So lunchtime today, obviously this is the potential bomb. We've also got Macklem speaking later. So we've got potential volatility coming in the US today with the GDP figures. We're forecasting everything to be kind of as expected on GDP. Non-farm employment change, obviously this is the precursor to non-farm payroll. So that will give us an indication of what NFP might be, which may give us an indication of what the unemployment rate will be, which means they may start a move on the US dollar today as well. But this one here, at the moment, the market seems pretty comfortable with what's been released. So with the budget, we tend to get information up front as to what's coming. At the moment, because we're not in the same situation financially and with borrowing as we were with Liz Truss when she upset the market with a massive change, which is what this is. This is a massive, it's the biggest change in in about 20 odd years. It's the biggest change we've had potentially in financial stance from a budgetary perspective. Massive shake-up coming in taxation and things for business. So it has the potential to really strangle the economy, because what they're basically doing is putting up tax. The shortfall, quickly to explain it, it's the same as you and my, basically. We have bills, yeah, and we have income. Yeah, so here is our bills. Here's our income. If our income is bigger than our bills, we have money to spend. If our bills are bigger than our income, we have to borrow. Yeah, we were about 112 billion in borrowing at the moment, and she is looking to reduce that by increasing our income above our bills, our expenditure on NHS, everything else, by putting up national insurance contributions for businesses. So businesses will have much bigger bills to pay, which means it stifles them, means they make less profit. Less profit is less expansion is less income in GDP, etc., etc. So it stifles the economy, meaning negative pound. So depending on what she says today and the full story, the analysts in the central in the banks and institutions will be crunching the numbers to decide whether or not they've got a bullish or a bearish stance. Last time this happened, obviously Liz Truss crashed the pound by 10 ADR. We moved 10 ADR in 2 days. Absolute freefall. Then the Bank of England had to bail us out, i.e. the government had to borrow more money, which caused problems. So that's the potential for today's budget. It may be that everything she says they're comfortable with, happy with, but there's a high probability we'll get some volatility of some description. So if you've got any pound exposure on today, just be aware. If you're position trading on the pound, I have only got £1 exposure on at the moment on the pound odd. It's coming down nicely. When you've got this type of news that could potentially impact you, there's absolutely nothing wrong with doing something like that and just making sure that if it does go the wrong way, you are going to scale out of something. You can take in a complete hit on it if you want to, but if this goes 10 ADR that way, highly unlikely, that's the more likely 10 ADR move, but if it was to go that way, obviously killing your lot sizing obviously reduces your overall drawdown. You can see my targets are down here, roughly 4 ADR. Yeah, so what I'm looking at is if it collapses, because they really do not like what she says, I'm going to take some serious cash out of it. Yeah, there's no point in having a target here if it's going to do that. Yeah, so these are your home runs. If they don't happen, they don't happen. I've only got 3 on this, so I'm definitely not going to do that. Yeah, just be aware, obviously that's coming up today. So there's your news coming up. There's no member streams for the rest of this week because I'm doing other things. It's half term and stuff. But what I'm going to do today, when I get back later on is I'm going to release the Swiss Army Knife EA for the members. If you're in the member streams, you know what I'm talking about. But we're going to release this strategy basically so that you can have a play around with it. So it's a nice little strategy that one of the members came up with, which basically uses single day trades, position trading, and Fibonacci mean reversion. So it's a good little strategy. But what I've done obviously is I'll put together a version that has a lot less inputs and is purely focused on that particular strategy so that you can play around with the inputs on it basically. So those are the inputs down here. So you can fiddle about with them and do some testing. I've done some pretty rigorous testing on this. I'm going to be doing a lot more because I need to put a portfolio of all the trades it takes together so I can see what the total drawdown is. So I can see how it's going to play out. But it's a nice little mean reversion position trading strategy, but not something you can leave running indefinitely. So it's got, I am personally, if I was going to run this, I would be running it with a stop. Yeah, because you get squeezes. So it's going to stop out after 2 trades. So maximum exposure, as we identified with the strike rate. The strike rate is amazing, 78% strike rate with this version that I'm running. So because it's got such a high strike rate, there's absolutely no point in holding positions which could harm you long term. So, but I'll put this out for the members today in the members Discord, and obviously you can have a play around with that. So because I'm not doing streams for 3 days, that will give you something to do. And then we'll look at it in more detail next week. New Zealand CAD ADR. New Zealand dollars on a run today. Wow. Oh, I'm back to break even on New Zealand CAD. Okay. New Zealand US, rather. So Australasian. Yeah, this is New Zealand dollar strength. Look. There's a lot of Aussie strength coming through, but there's a lot of New Zealand strength coming through as well. Just a big run today going on. So there we go. So there's your news. That's all the news covered. I'm going to whiz through the pairs today and have a look at everything. We'll keep an eye on the financial juice feed. Let me just put that up over here. Just so that I can monitor for the German CPI numbers as they start to come through. Right. So that's your ADR today, New Zealand dollar CAD. This is holding very well, this low, isn't it? So it looks like we're either going to just carry on doing that, or we're going to break up and come and retest some of these areas up here. Really good resistance area here, look. Previous level. So 200 ADR away. So if you want to take a short on this on an ADR reversal, obviously you could scale in up to 200 ADR to 250 ADR. And then you're probably going to find if we get parabolic up to there, you're going to undo a portion of that move. So not a bad little ADR reversal opportunity. I'm the opposite way because I'm on New Zealand US long. So again, my targets I've extended today because we've got US dollar news today. If we get negative US news today, with all these US moves, yeah, we know we've had a massive parabolic run on the US dollar. When these moves, you've heard me say it many times before, this climbing up the stairs, falling down the elevator shaft scenario, which we get. Yeah. So when we're getting nice market structure and trend, the banks and institutions are piling on the profit. When we get that structure break and the reversal starts to look like it's happening, we tend to get that type of movement. So the profit take move happens twice as fast, if not faster, than the run up, basically, because everybody that is sitting in profit, and by everybody I mean the institutions that are sitting in profit on the positions they've built, sees their P&L drop quickly, And if the P&L drops quickly a number of times, the alarms go off, signaling them to exit the positions and take the profit. As they exit and take the positions, other people's alarms trigger, they exit and take the positions. As that structure break happens, the people that want to short see the short starting and they add to the positions. So everybody that's been buying exits at the same time by becoming a seller. That entices sellers into the market, meaning that the move happens twice as fast. Exactly the same inverse, obviously, if it's a sell squeeze. Sell squeezes will tend to do that. Yeah. So you see my target's at 200 ADR. We get negative news today on the US dollar. And obviously with all the volatility potentially we've got coming in on the pound, you could see yourself at a 200 ADR day easy. So hence my target is fairly decent on that. Obviously from a long-term perspective, if you're going to do a multi-week hold on this, you're looking to come up for a 50% retracement on that leg. But this is all going to be based on what's happening with the elections. So we'll have to wait and see. Morning, everybody else. Virginia. Why is my star light blue? Why is your star light blue? That's a good question, Vitaly. Are you a month 2 member? You are. Shush me. There you go. That's why. I think it's because that is month 1. That is month 2. That is month 3. Up to however many months. So I think you are the first person that has been a member for more than a month. Well done, Vitaly. AZ, morning. Barrier Man, that's my cousin. Yes, poor old Barrier Man. Right. DAX broken short. FTSE long break is failing at the pre-market highs. So I'd find it amazing if this thing took off today, because obviously we've got a massive potential day on the pound. That if nobody in their right mind is going to be making massive stock purchases or sells just before the budget comes out, because if there is anything that goes wrong or right, and the pound is either at 5 or 6 ADR higher or lower than it was in the morning, you're going to want to do something different with your stocks. So I'd be very surprised if we get a big break on this today, but you never know. They might scale out and panic. Morning, George. Evil, morning. Evil's got a light blue one as well, look. Interesting. The numbers for Aussie CPI from Forex Factory 2.1 are quite different from Financial Juice 2.8. And Harold's got a light blue one. So he must be about a month in then, I guess. From when I launched the membership thing. CPI 2.9, 2.8. They're reporting different figures, I guess. Well, that's a good button, isn't it? Not quite sure what that button's meant to do, but it don't work. See, they're taking this 3.8 look down to a 2.8, which is the July figure to the September figure. So that's the yearly. Hang on, that's the quarterly, they said, isn't it? Yearly, yeah. So I think what's happening here is obviously the yearly figure is released monthly. They're just adjusting their figure differently. So they've missed out the August numbers basically on Financial Juice for some reason. I don't know why. The thing with data is there is a number of ways you can report it and a number of ways you can look at it. Yeah. So the most of the institutions scorecard based on quarterly figures. Reason being is yearly figures are too broad. Something that is different from a year to a year, there's too much stuff that goes on in between that to make it really useful data. Long term, it's great. Monthly data is quite often too fast and too reactive. Think about indicators. Yeah, all data is an indicator. Look at your RSI. Aussie New Zealand is ADR as well. We've got loads of ADRs going on the Aussie pairs and New Zealand pairs. So think of it like an indicator. This is the RSI 21 at the moment. If I want to make this more sensitive, I can do. So I could say, well, don't show me the last 21 bars worth. Show me the last 10 bars worth. And I'll get a different reading. So inflation you can look at on a yearly basis, a 6 monthly basis, a quarterly basis, a monthly basis. You could look at it on a week by week basis. The data's there. But the more sensitive you make it, the less accurate the readings are. So a quarterly reading is typically what market participants look at, which is the same way as you work in stocks. Stocks report quarterly. These moving averages, quarterly moving averages, yeah? So this is your quarterly moving average and your monthly moving average. So everything is done on monthly and quarterly cycles within finance. I don't know why their data's wrong, but the quarterly is usually the most important because it gives you a not too quick, you know, something could change this month, which makes CPI dramatically different. But it's only this month. The next 2 months will undo that, whatever that thing was. It could be anything, couldn't it? So when you look at it on a quarterly, you're getting a smoothed view. When you're looking at it 2 yearly, you're like top down. It's gone from there to there. A lot of stuff happened in between. So I don't quite know why they're reporting different figures. But you know, this is the one. This is why this is more important. This is why you'll find quarterly figures like the Spanish CPI is year on year, not really that important. But it all, you know, all goes in the pot at the end of the day. But you know, everything is not so much discretionary, but everything is going to have a different impact depending on people's view on it. Some people are looking at they may have a strategy where they're looking for CPI to continuously come down quickly month on month. They'll be more interested in the monthly figure than the quarterly. Yeah, so different banks and institutions will scorecard in slightly different ways, meaning you get different price movement, which is what makes the market move up and down at the end of the day. Oh yes, of course, I'm a year-old member. A year-old member? No, I've only had memberships for a month, Vitaly, so it's nothing to do with that. Do you also sell the Swiss Army knife? No. Probably, but for Forex Factory, they're basically at target. Not so much for Financial Juice. Yeah. I have always said, and I have always been taught all my life in trading, trade what you see. If you see that, that's what you're using. If you see that, that's what you're using. If you look at my chart, you're using my chart. If you look at your chart and price is different, the reverse alert's in a different place because your data is different from your broker, look at your chart. Look at what you see. Everybody's going to look at things differently, and that's basically the way it goes. So pick one. But the figure's right. Yeah. Well, it's not actually. It's 2.8, isn't it? It's not right. I don't know. It's a red number at the end of the day. So they're both reporting a red number. I really don't know the answer to that one, as to why that is so dramatically out. They're just obviously using different price data points because that 3.8 is definitely there. Who do you trust? That's what it comes down to at the end of the day. Right. So ADRs, we've got some ADRs triggering now. Aussie New Zealand obviously is an ADR. We've got the pound New Zealand. So this is definitely a New Zealand dollar move. Pound New Zealand coming down hard. New Zealand dollar CAD rallying strong, as we've just seen. And New Zealand dollar US dollar rallying strong as well. So whatever the reason for this, they're just dumping into the New Zealand today Don't quite know why, but they are. So there we go. US dollar CAD coming off. Yeah. So 4 hour. We pushed up again recently, obviously yesterday. So I stopped out of another one on that yesterday. Not having much luck with aggressive drawdown control on this at all. Another one put on yesterday, which is obviously in profit at the moment. But yeah, looking for that to come down. That is the biggest parabolic run I think we've had. Without a pullback. So, you know, we're at an area of interest. So this orange line that I've got on the chart was that old high. Obviously, that's last month's high. So within ADR today, we've got last month's high. We know the limit orders triggered at that level because you can see them on the chart. Yeah. So this accumulation here this week is basically limit orders triggers holding price. Yesterday, they blew through it. If they come back down through that today and we get a reversal alert, I suspect this thing is going to collapse. Like I said, it's the same thing. It's to climb up the stairs, escalator shaft. They are loaded on this at the moment. Yeah. So think elastic band theory from the boot camp. Yeah. Doesn't get much more stretched than this. Yeah. I've done, I will do some analysis in a minute, but I've done an analysis this week on this year's trading. Actually, not this week. It's last week I started doing it as well. This year's been, as I've said before, my worst year trading, position trading since I started. You can see why very, very clearly with some of the readings we've had on RSI this year compared to the last decade. Go back as far as you want, really. But the moves that we're experiencing this year, we had one there, look, up at this sort of level back in 2022, interest rate rally. Yeah. Obviously, COVID. Well, what the hell? I'm having to load data in here. But you know, going back, this is going back to 2015, so we're nearly a decade back. Look at this orange line and look at how many times we achieved this sort of extreme. There's one there, 2018, pretty much financial pop. Yeah, so what we're experiencing this year, and we have experienced since COVID, there's one there, and there's one there. Yeah. Almost one there, almost one there. It's starting to get very, 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 very volatile, the market now. And it's to do with interest rates and interest rate differentials and the way that things are moving now. We've got an awful lot of stuff that's different now than it has been in previous years of trading. So we've got to start looking at ways to diversify more and reduce risk when you get these types of market conditions, because the thing that we can never tell is what is going to happen next year. Whenever you get new levels of ADR achieved and you get new norms happening, they will very quickly become the new norm. Yeah. So new things that are happening, we call them unprecedented events. We had an unprecedented event back here, look. Yeah. This move here. Yeah. If you look at the euro US dollar, we've had some was it euro US dollar? That's what it was. We've had some very weird price movements, and you've got to start to factor those in. So what you have to do is start to reduce the risk and diversify, basically, which is what I've always done every few years. I used to trade H4 M15 using the 14 RSI. I now use the 10. I used to trade H1 M5 because the market conditions changed. When the market conditions change, you tend to get squeezed. When you get squeezed hard, you have to look at what the new squeeze is. and it changes all the time. So you have to adapt, which is why there's no EA you will ever be able to buy on the marketplace that you can stick on a chart, run it over 10 years and it make money, because market conditions are different every year. This is what people fail to understand until you've been in the industry for 2, 3, 4, 5 years and you suddenly realize, holy crap, this thing never does the same thing every year. It's always different. Always trade the pound US dollar because it's the highest volatile pair. It is until it's not. Yeah, or never trade the pound New Zealand because the ADR is 350 pips until it's not. Yeah, it changes all the time. Before COVID, I was trading this thing at 350 to 450 pips. It's 131. This is not the same market, so you have to change and adapt. One of the things I said is massively different this year, and which I've found from the analysis that I've been doing, is swaps. This year, I have paid over 20 grand in swaps, 20,000 in swaps. Never, ever, 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 ever had that much outgoing in swaps before. So they are now a major factor in my profitability. So I've got to address that. So one of the things I'm looking at incorporating, and I'm going to probably put it into the position trader EA, is a swap filter. If anything has more than a $5 swap as a negative, I ain't interested. Yeah. Some of the biggest moves I've had this last quarter, in fact, are euro pound. Yeah. These two positions here cost me $3,500 to hold for 3 weeks. Each of those was a 3-week hold. Yeah. Going back and looking at my P&Ls from previous, 3-week holds never cost 3.5 grand. Yeah. It's not a cost of doing business that is an extra cost. What it is I need to move further with price to get out. So it makes exiting positions harder using higher swaps. If you flip this and say I'm only going to go short on it, I would never have that problem. Didn't have that problem on that trade. Yeah. So there's all sorts of things that change, and you have to do these little analyses every now and again. And this year, as I said, has been a bad one. My income is about 30% of norm. And there's nothing much you can do about it, because the market, as I said in the members stream yesterday, doesn't matter what risk you apply or what edge you have that you apply to the market. The market will pay you what the market will pay you. You cannot force the market to pay you £10,000 a month or $10,000 a month. The market will move up and down. You can extract what you can out of a moving market. If the market doesn't move far enough for you to extract the same amount of money as you did last year, you ain't getting it. And you have to decide where to get out. And that is what makes you profitable. How you get into a trade has got absolutely nothing to do with making money. You can flip a coin down here and either go long or short. If the market goes long, you can extract money from the market. If it goes short, you can deal with that position and extract money from the market at a later stage. The amount you extract is down to the market, not you, not your strategy, not your risk. It's down to what this thing does. This thing this year has been doing a lot of that. Yeah, that isn't conducive to position trading. It's brilliant for breakout strategies. Yeah. So everybody that's now going, hey, I've got a new strategy. Look at the last 12 months. I've been taking breakouts. It's making me a fortune. When this thing starts to go into mean reversion trends for the next 12 months, these guys will be dead. Yeah. So, but if you run all strategies, breakout, mean reversion and trend, you're always going to be right at some point, aren't you? That's what diversification is. But swaps and cost of doing business are now way higher, and it's not until you do an analysis that you actually realize what the costs are. And it's something that's got to change, basically, because I don't know what the new norm is going to be with interest rates. At the moment, interest rate differentials are what is costing me the most amount of money. And the way that the world is going at the moment, and economics are going at the moment, and conflict is going at the moment, and energy prices and impact of AI and all this sort of stuff, I don't know what the new norm is going to be, but I do know that if there is a massive swap against me, it ain't helping me at the moment. So I can eliminate that by saying, if there's a $9 swap short, I'm only going long. Simple as that. Yeah. So all these sorts of things, I'll do a video on it when I've completed my analysis. But yeah, you just got to adapt and survive. That's what it's all about. RSIs today, pound New Zealand. Obviously that's starting to play out now. So 4-hour RSI extension, that one's on its way back down again. Pound odd on its way back down again. So again, I'm on that one already. But anything pound that you're in, obviously 12:30 this afternoon. See what happens. It's going to be fun. Pound CAD just about got extended. Beautiful weekly level on that. If you take that short now, obviously you've got a monthly back up there, which is lovely. But obviously if the budget makes it do that, doesn't matter what the line is, why the line's there, the market will go where it wants to go on the budget today. So hopefully what I'm hoping is it just doesn't really do much. That would be lovely. If we just get a budget that the market was kind of expecting and they're quite happy with it, they don't see additional borrowing from the Bank of England, everything will be normal and the market will just carry on doing what it's doing. However, we've seen what Liz Truss was capable of doing. This is a new government. They are making a lot of changes. So just be careful. Euro odd, better off. Best thing to do, as I said, I've said it before and I'll say it again. If you haven't heard it, remember this. There's 3 ways you can trade: long, short, and flat. Flat is a position. Yeah, there's 3 positions in the market. You can have a long bias, a short bias, and nothing. If you're sitting on your hands watching the pound go nuts, you ain't losing money. You're not making any, but there's a lot of people running around like headless chickens around you. It's fun to watch. Yeah, so watching the market is as much fun as being in the market while the thing's going nuts. In fact, it's probably more fun. Euro odd obviously extended to the upside. We've got a nice bearish reversal going in at the moment on there. M pattern divergence as well on the hourly time frame. Zoom out so we can see the divergence. Yeah, and it's constant divergence at the moment on this. So all bearish. So RSI is not making new highs. The market is, which means that that is going to come down fast and hard at some point. Last 3 hours, obviously, it's on its way with the Oz at the moment. And Aussie US is also extended, but obviously all these trades you've missed them because they are all mainly Australian, New Zealand based, and we know we've had a big run. So this is the profit take move underway, hopefully on all these at the moment. Unfortunately, it's always the way. Somebody asked me about the in Discord about cutting positions, and if you've been in here for a while, or you've been dipping in and out of my streams for the last 4 or 5 years, and you've seen me in squeezes before, the time a squeeze ends is always the same. It's when I get out. When I decide to cut it and go, I can't hold this thing anymore, within 24 to 48 hours, it'll be there. Look at that exit yesterday. As soon as I take a loss, bang. And this was an aggressive drawdown control position. I take it off, then the market goes. Always the way. So I'm holding the US dollar CAD. Sorry, but if I get out of it, it's going to play out for the rest of you. Screw you, I'm holding it. Because it's always the way. And this is why they define it as a squeeze. When the market is squeezing, at the point where everybody that is the wrong side of it exits their position, basically, I have been buying this thing. As soon as I start to sell it, everyone else starts to sell it. The people that are selling it are just not going to have any buyers left at the end of the day. And that is why that ping happens. The elastic band snaps. This is why the market does what the market does. Yeah, great example of the climbing up the stairs, falling down the elevator shaft there. Look, 50% retracement. That took 3 weeks. That took 3 days, sort of thing. Yeah, that's the sort of thing that's going to happen with all these pairs at some point very shortly. But it's always when I get out, you should be getting in. Leave US dollar CAD, please. I will, don't worry. Exit my GU with a small profit. Could have been more, but didn't want to get wrecked. No, if you've got any pound exposure on at the moment and you've got profit on it, it's entirely up to you, but I would take it today before the budget. There's 2 things are going to happen. If you've got pound US dollar and you're in longs at the moment, you can either make a load of money today or you could get destroyed today. If you've got profit, you can take that out and you can go and spend it today. Take the money. Yeah, it's about making money. It's not about being right. That's so get out when you can. Right. So those are your RSIs and ADRs. I'm going to whiz through all the pairs as well today. Let's just quickly look at what the indices are up to. Nightmare day yesterday. Double hedge yesterday. I had to re-hedge yesterday and I made 1900 loss yesterday. So actually, that's not true. This week I've made 1900 loss. Been a bad week so far. So you get weeks where it just doesn't pan out, and this is one of them. I'm going to take one off on the FTSE. Break even on the second position, just because it's the FTSE, it's the pound. The pound today has got potential massive volatility. So yeah, if it wants to run up and give me my second TP, brilliant, but I'm not taking massive risk today on this. It's starting to reverse at the moment at yesterday's low. Yeah, so this reversal that we're seeing here is yesterday's low. Put it better on the hourly chart. So they're reselling the lows of yesterday. So if this is going to continue to sell off, and this is boding well for a pound, so for the pound today, but we'll see. So just getting out of that one, and obviously you'll break even on this. Well, not break even, make a small profit on the second, or it will run. DAX dead, not going anywhere. Right, so let's quickly run through everything today. So bear in mind today you've got everything affected. Aussie and New Zealand will be affected by that CPI. We've got the euro being affected by the German CPI figures, Spanish to a certain extent, but that doesn't really, there's very little economic impact from the Spanish. We've got potential for Jordan to upset the market with Swiss franc news. We've got non-farm employment and GDP for the US dollar, and then we go into the budget. Yeah, and then later on today we've got Macklem. So literally the only thing today that hasn't got high impact news is the Japanese yen, and the Japanese yen tomorrow is changing its interest rates, so, or not changing its interest rates as is the forecast. So today basically any analysis is what we see right now, but what happens later today is totally down to news and the fundamentals. So we could have an absolutely massive move all over the place today. These are the days where you look at the ADR dashboard and it basically, we've had it before, it is red. I think there's only been one day that I can remember where we've had every single one of these lit up red. The whole lot, everything hit 225 ADR. We had a very close day like this when the yen intervention happened, but prior to that, guess what? Liz Truss's budget. This thing, everything. So bear in mind, when you get something that collapses the market, a sort of micro sort of black swan event, something that moves sort of 4 to 5 ADR or more is a black swan, but it's not an account wrecking thing. But when you get moves like that where everything moves more than 200% of ADR, the reason being is because if some currency has something dramatic affecting it, the other currencies have to react. So if you have to sell as a bank or institution all of your pound exposure, that pound exposure that you are exiting has to go somewhere. You can't just take the pound out and go, it vanishes. Yeah, you have to put the pound somewhere. So if you're going to sell all your pound, you have to buy something else. US, CAD, Swiss, yen, something else. You've got to buy something else with that money that you're liquidating. Therefore, if the pound collapses 300 ADR, everything else is going to benefit from that, or something is going to benefit from it massively. So just be aware when you've got these days, which I'm talking it up a lot in case it happens. It may do absolutely nothing. Nothing may happen today. But if it does, those are the days where the ADR dash goes nuts. Turn off your EAs. Yeah. If you're going to get 200 ADR moves, yes, there's a high probability they will reverse, but we don't know. You know, like I say, flat is a position, and flat is a good position to be in on days like this. Aussie dollar CAD. So at the moment, obviously, we know we've got weakness coming into the Aussie. Now we've got those CPI numbers, expect further potential weakness. So the inflation has dropped. That number's not been updated, but it will drop further. Obviously, the interest rate. So we haven't had an interest rate drop on the Australian dollar yet. That will be happening now. So we know that we are going to get a drop on the Aussie. Whether or not the market decides it's going to be a fast drop or a slow drop will depend on them, and obviously that will make the market move at a whatever speed it's going to move at. But overall, we've been very neutral on the Australian dollar, as you can see, or against the US, everything's been weak, but overall pretty neutral. So just because we've now got the CPI number where we were anticipating it being and much closer to that 2% target, it means that they have the ability to drop their interest rates. However, they have kept their interest rates at the lowest point of everybody for the longest period, which is why their inflation went so high. So it may be that they are now looking at this and going, excellent, it's going the right way. But look at what everybody else is doing with these numbers. Yeah, their interest rates are roughly there or below there with the same number. So there isn't actually a reason for them to drop it straight away, and there's no reason for them to drop it fast either. So it could be that we don't get an awful lot of impact out of this inflation number next week. So sorry, the inflation number today. And next week is when we're going to get the interest rates. So on Tuesday next week, that's when our interest rate change is coming in. A 4.1 is probably the most likely move. However, they may decide to keep it where it is. Yeah, unlikely they would go below 4%. They won't drop by 0.5% because they're not down at that target yet. So it's very difficult to read the Aussie, and as you can see, the market today, off the back of that news, rallying. Yeah, so we've had negative news. Inflation has dropped further than anticipated, meaning interest rates will come down, which will weaken the currency, and the market's rallying off the back of it. But that's because it's already moved the market in the direction it was expecting. So don't forget, the market factors in movement before it's released, not when it's released. The movement that you get on release is the market adjusting for the release. And this is what we're seeing here at the moment. So yeah, all the Aussies basically, anything that you've been getting into on the Aussies because they've been extended, starting to play out today. The CAD Swiss sideways at the moment. All the Swiss franc pairs, obviously, we're still in the same boat with these Swissies, which is basically, I don't know. Neither does the Swiss National Bank. So today we've got Shengu Schlegel speaking. Chairman Schlegel is speaking. So we've got potential for volatility on the Swiss franc today as well. So this could go absolutely anywhere. The Swiss is neutral, as we know. Inflation and interest rates are all under control. They always are. They're a banking country. All their money is made on financial services. They are neutral. They're not in NATO. They don't get involved in wars. It's a safe haven. So when anything goes wrong, we get a massive rally in the Swiss franc. With everything going on at the moment, as you can see, I took a short there on this one. Very brave. But if anything goes wrong anywhere in the world, basically we'll be looking at that sort of movement. Farrell, welcome to the private streams. You are a new member. Welcome aboard. Do you have thoughts on Euro US dollar? Yep, getting to that one. So with the Swissy, thanks, Farrell. I will see you on Monday. That's the next member stream. But go and if you want to go and do something exciting today for the entire day, you'll have to watch me on 2x speed, but there's plenty of stuff to look at in there. Good luck. CAD Swiss range at the moment, so it can go either way. But anything that I trade on the Swiss franc at the moment, I would much rather go with the Swiss franc powering up, which means everything down against the Swiss. So Canadian dropping against the Swiss, because what's going to happen is if anything goes wrong, the Swiss franc is going to rally. So as a safe haven run, I'd much rather short everything. But we'll have to wait and see what happens with it. Nothing at the moment. We're very neutral. CAD yen, all the yens very much the same. Yen is completely sideways, so pretty much the same as I was saying on Monday. This thing's just not going anywhere. So at the minute, what you're looking for are range highs and range lows, and basically longing it and shorting it and assuming it's going to continue to do nothing. Tomorrow we have the interest rates coming out on the yen, so all the yen pairs basically you've got potential for some kind of movement tomorrow on that. I've got a Swiss yen short on at the moment. It's the only Swiss and the only yen I'm taking. So I thought I'll take that one because that's the one that I'm not taking any other Swiss pairs. I'm not taking any other yen pairs. I'll play the Swiss yen. This is the one that's moved. Everything else doing that is Swiss and yen related. So what do? I trade the one that goes against me. This is trading. Totally random. Nothing you can do to forecast anything. So all these Swiss pairs, as I say, totally sideways at the moment. All the yen pairs. We've had a little bit of movement on the euro yen. That's broken out of its range a little bit, but all the rest of them pretty much sideways. Look. So all the Swissies and all the yens, as I say, I'm just not getting involved in these at the moment because I just do not understand what the yen are doing. Obviously, they don't know what they're doing. The market doesn't know what they're doing. Therefore, no one's doing anything with them. So they're kind of dead ducks at the moment, the yen pairs, until we get some kind of indication of whether or not they are going to use overseas bond purchases, mainly in the US dollar, to control the yen, or whether they're not. And we just don't know at the moment. So they are using interest rates to control inflation now, which they haven't been for 2 decades. But also, they're not changing the interest rates. Yeah. So you've now got a control mechanism of interest rate change on the yen, and you're not using it. So, the market just doesn't know what to do with these yens at the minute. So all of them are kind of basically whatever you do with the yen, it's the opposite side. So if you're trading the yen or you're trading the Swiss at the moment, it's the cross currency that's driving it, not that. Yeah, they're neutral. So if you are expecting strength or weakness in the US dollar, you can trade the US dollar yen. But you're actually trading just what you think that one's going to do. Yeah. So all of those, bit of a mystery at the moment. Euros. So as I said, with the euro, we've got the CPI numbers coming out. There's nothing come out of Germany so far today. We will get that usually by 10:30ish, coming out on 9 o'clock. So apart from that, from a euro perspective, we've got nothing much else this week for the euro. If we look at next week, there's nothing much there either next week on the euro at all. So no upcoming news to worry about with that one. So at the minute, Lagarde, absolutely happy with everything. Inflation's good, interest rates, everything's under control. So at the minute, it's kind of neutral, stroke bearish. So they are getting on top of interest rate inflation much better than most. We're down to 1.7. They've got their inflation numbers down to their interest rates down to 3.4. Somewhere around about the 2.5% to 3.5% interest rate is a good level to control 2% inflation. So they're pretty much where they should be. GDP ticking along, not great. Unemployment ridiculously high. So there's still pressure on reducing this, which obviously helps with that. So I think with the euro, you've got to kind of look neutral to bearish on it, more neutral than anything else. New Zealand Swiss ADR still rallying the New Zealand dollar. Another ADR hit. So with all these euros, it's a case of you're basically able to trade it in any direction, really. So any extensions you get, you've got a good chance of it just moving normally. Normal market structure on its way up and on its way down. And if it's going to sit range bound as it did there, absolutely fine. If you get any RSI extensions, as I got there, look, yeah, shorts. So just waiting for it to move basically, and then trade it in either direction. So at the moment, you've got a setup on the hourly there. There was a 4 hourly as well. New Zealand dollar CAD 125 ADR. Just need to keep an eye on this. New Zealand dollar. Just about to hit 125 on New Zealand US as well. So yeah, you got an extension on the 4 hour there for a short. I would normally take this one. I've turned the EAs off at the moment this week while we've got this stuff going on with the pound, with potentially the budget, and with the US. All EAs are off. I'm not taking any new positions. I'm just managing what I've got on at the minute. But that is a short opportunity, obviously, there. You've got a lovely bearish engulfing going in. 4-hour reverse alert is about to trigger in an hour's time. And your hourly, you've had one. Oh, no, you're just about to get one on the hourly as well. So that's going to trigger in 5 minutes. You're going to get a reversal alert there. So potentially look for a push back up into propulsion and a drop. That's also extended on the hourly and embedded. Euro CAD, same sort of thing. We've just tapped into this previous weekly level. We've got the so that's the 2-week high and the 3-week high, which is the A-shaped recovery propulsion move. So obviously banks started selling there. They added more in there. They added more in there. We're coming back up and retesting that level, forming a range. So at the moment, you're up at the highs of the range. Good short opportunities. Not quite extended enough on the hourly, but the 4-hour, I think you had an extension. Yeah, just above the 70 though. So short back down into there. Plan back up into there or up into there. So if you short that there, look for additional entries. And then if that leg is up there, we're extended up here, and that will start to pop back down. Euro Swiss, German unemployment rate is out at 6.1. That's just unemployment, it's not CPI. Swisses have covered. Euro pound, totally dead at the moment. The euro pound, we're totally sideways down here. Have been for the last week and a bit. Not surprising with what we've got coming up with the budget. So potentially we've got a short when we get back up into these highs. But as you can see, I had a long there off of that one. Every other entry that I've had on this is taking forever to get out of. Yeah, it's just not moving. It's 36 ADR, the euro pound. It's an absolute slug. So I still think there's a good chance that we'll get a move up there, but it's obviously going to be based on this. And next week, we are going to be dropping those in. Well, I say we're going to be dropping those interest rates. I'm expecting those interest rates to come down next week, Mr. Bailey, because you haven't dropped them so far. So next week, we've got the interest rates for the pound. If we don't get 4.75, possibly 4.5, I really don't know what the market's going to do with this, because we've been waiting for those interest rates to drop for what seems like forever, and he's just not doing it. So we have had one interest rate drop, but we were expecting it way quicker than that. So this potentially has the possibility to go up next week and the week after, because we're going to see potentially some weakness coming through in the pound. But as I said, we're neutral, and this is probably the worst thing to trade at the moment, especially if you're long in it. Yeah, and this is a brilliant example of swaps. Yeah, this is one of the most expensive things I've traded this year, apart from the US dollar yen. If I was shorting this, not a problem. Every time I long it, it costs me a fortune. If it doesn't work out within a week, it's expensive. Yeah, so as you can see, there was a short opportunity there. There was a short opportunity there. There's been more long opportunities than short opportunities, but at the moment I'd rather just not take them, because if they don't work out like this one here, if that news spike hadn't have helped me out, it's a good example. Look. If that news spike there hadn't have got me to target straight away, I would be sitting in this still. Yeah, so that position, and I probably would have had a second on somewhere down there, 18 pips. Yeah, so I'd have had a second position on somewhere down there. I'd be sitting in these two positions. Actually, I'd be out within a week. So ignore that. I would have been out within a week. But you can see what it's doing. It sits around. So we get news sit around for ages. News sit around for ages. And that's basically what this pair is doing. So it's just the nastiest thing to position trade at the moment. News. 3 weeks. Yeah. Just taking forever to do anything at the minute. So not my favourite pair in the world. Euro New Zealand coming down nicely at the moment. Had an RSI extension on the 4-hour. You also had an hour. Oh, no, you didn't. I thought you did have. No hourly on that. But yeah, just coming down at the moment. So there's a news just coming. No, it's not. It's just more German unemployment news. So yeah, nothing much to do on the Euro New Zealand at the moment. It's just sitting around rangy. Euro US dollar. So longs on this one at the moment. Beautiful reversal alert's gone in on this. And the retest. and then we've double bottomed on the retest. We've broken that high now, so that propulsion gap is now filled. So next target is going to be there, which is last week's high. So that is where we're going to sort of run into some resistance probably at last week's high. But as you can see, there's a high probability of a much deeper pullback on this, but it's all to do with the elections. Yeah, so if I can get out of this by the end of this week, I will, and I want to get flat for the elections. So I've taken a fair loss this month, 6% down. So if I can get out, I say break even on the rest, but if I can get out with a little bit of profit to reduce that loss a little bit this month and get flat by the weekend, that's the job this month. Just about controlling risk during the volatility that's coming up. So lovely big pullback on this. Highly likely we're going to get back up and retest that previous month's low and have a 50% retracement on the leg. This is a 30, it's not even a 38, I don't think. I think it's probably a 23. Yeah, it's a 23 retracement there. This propulsion move. So that is potentially a flag break. So if you're looking at flag breaks, they tend to be 23 retracements. Pullbacks are 38, which is where my target is. So that's what I'm looking for personally. But if this thing gets back to here and I've got New Zealand dollar, US dollar in profit, US dollar CAD starting to work out, I'll get this off the table just to get out basically. But yeah, lovely bottom look. So we've covered this in the members streams. Yeah, levels, why they work, where the banks are, what the banks do, how the banks place their orders. That is the banks placing orders, defending the previous move, and that is why that will move. Now, they've been scaling in so hard. What the banks and institutions are now seeing is all the short orders they're sitting on their P&Ls. So their P&Ls on, this is a 4 hour. So the P&Ls 2 weeks ago were 25 million. Yeah, their P&Ls last week were 27 million. Their P&Ls right now are back to something around about 24.5 million, whatever. I'm making these numbers up, but the point is they're seeing their profit turning back against them. As they see that turning back against them, they will exit their short positions. The way you exit a short position is by buying. Yeah, so it's a two-way market. If you've sold it, you have to buy it back. If you've bought it, you have to sell it. So they are now buying. Yeah, as these guys that see this happening want to get in on the buys, they will add buys. So they are buying to get out of their shorts. People are buying to get into positions long. Yeah, climb. You can't do the climbing down the stairs, falling up the elevator shaft doesn't work. Climbing up the stairs, falling down the elevator shaft works. Abseiling down the cliff, bunging back up. Oh, no. Same thing, just works in opposite. Elastic band theory. Pound odd, shorts on that one at the moment. It was a bit of a risky one to take. I had a pound New Zealand on as well, and I took that off. Because obviously what's going on with the budget. I did want to have some exposure on the pound, but I didn't want to have too much exposure on it. And again, look at the level we've got up to here. Yeah, that's that weird move I was looking for, where we got that 225 ADR move literally within an hour. Something slipped somewhere. So this is really the high here. So yeah, looking for a pullback basically on this. And obviously today's the day. So I'm going to be watching this carefully with these sorts of positions I have on. So I've got this on short at the moment. I've got TPs ridiculously far away. Yeah, so that's 225 ADR. When we get a 225 ADR, it happens 2% of the year. Very rare we get a 225 ADR move, isn't it? It's normally on news. My target is around about 4 ADR, 400%. The numbers are less than 1%, which is why they're not even on the chart, because it's so rare that it happens. But when it happens, it's usually because of something like today. So what I tend to do with these positions is, let's say, for example, we're sitting at 125 ADR around about 11:30 this morning when the budget comes out. what I will do is I'll look at the size of that move, which is at the moment 116 pips, and I'll basically stick a trailing stop on that position of 116 pips or 115 or whatever it may be. So when that news of the budget comes out, there's a probability we may well get a whipsaw, but if there's something really nasty in there and the market just goes for it, I'm going to trail that. Yeah, so I use trailing stops only when I think there's going to be huge volatility coming in one go. Also, if there is going to be huge volatility against me, I want out of that position because I don't want to take that into drawdown as well as that and that. Let's take this one off at a break even or as close as we can get to it and just go into drawdown on 2 positions. So on days like this, you know, if I've got enough room, I will protect positions because you can't. If it goes against you, it's going to go against me with 33% more drawdown than it would do if I took that position off. Yeah, so that's my plan on this. Obviously, it's going nicely at the moment. All the pound pairs, as you can see, are kind of stalling out. Pound odds moving because of the Australian dollar, but all the pound pairs, you're not going to get an awful lot of movement on them until we get the budget. Out of the FTSE, so just bank 178 on that. Again, I'd be very surprised if we get a rally on that before 12:30. DAX short still holding. I'm just going to move TP up on this one to 2.5R. In fact, you know what? I'm going to take it off. £400. That removes 25% of my loss this week. We've got the CPI number coming out. Oh, Rhine CPI is out. Rhine CPI 2%, previous 1.5. Inflation has bounced. Month on month 0.3 on a 0, so it's bounced. So the CPI is up 0.3% month on month in the Rhine region. There we go. North Rhine 0.3, previous 0. So we were expecting a bounce. We're getting the bounce by the looks of things. So that's the reason I'm taking that off, because obviously we've got these CPI numbers coming out and we're going to expect potential volatility on the DAX. DAX is priced in euros. Obviously it's German. Yeah, it's German CPI coming out today. So volatility. So yeah, that's the first one, first release. The flash estimates are positive as well. So yeah. So ECB rate cuts, 31 basis point of easing in December, 22% chance from around 45% chance. So basically, because inflation is going up, what we're looking at doing is not reducing our interest rates as quickly. So what the market is basically saying here is we expect in November and December to have a 0.25% rate cut. We were thinking there may be a 0.5% rate cut, 50 basis points. Now there's a 22% chance of it. So it's an 80% chance that we're going to do a 0.25% rate cut in either November or December. Yeah. So that remains neutral on the euro, basically. So if the euros have been coming down, they'll bounce a little bit. So let's have a quick look. Pound CAD. So all these pound pairs, there's just no point in looking at them today. Yeah. If you take a trade on the pound this morning, it's going to go nuts at some point today. So whatever you do with the pound today, yes, it looks like a lovely range high sell, but it's totally up to what happens with the budget today. Yeah. Let me just quickly look at the euros, specifically euro US dollar. So we've had a little pop on the euro odd, euro CAD, euro Swiss. So it's a pop on the euro, both basically because we're not going to be dropping interest rates, which makes it bullish. So euro US dollar, nice pop as well. So yeah, so obviously all going in the right direction if you've got your euro US dollars on. So that's good news for anybody that's got euro exposure, euro US dollar exposure. So that's the Spanish. We haven't had this obviously yet, but it is looking like a bounce. So far the data that's coming out is all pointing towards a rise in inflation. New Zealand. So at the moment we've got this massive New Zealand rally going on. No news really about exactly why it's happening. We are just unraveling all of this New Zealand. So that's great. And as you know, it's the same thing here. We've got a staircase and we are pinging back up. So this specifically the New Zealand dollar, US dollar, you'd be hard pushed on any New Zealand dollar pair to be short at the moment. You'll be long if you mean reversion trading. So you haven't had any signals short, you've only had long signals, so you will be long on it. You'll be out of that already. You'll be out of that now already. Obviously if you got in on these ones here, you're out here, so you'll only be long on it. There is a possibility of an ADR reversal today, so you can drop down M5 and look for a quick scalp short off of ADR 125 and play it back down maybe into there. But obviously there's a strong move going on the New Zealand dollar at the moment. Can't see any news to back it up anywhere. Saxony has just declared 0.4 and 0.2, so again bullish. Euro, so again their CPI in Saxony higher than previous. Yeah, so it's all going in the same way. Always does. It's all, once you get one declare, normally you find they all do the same thing. It's unusual for one region to have a completely different number to another region, so you tend to find they all kind of do the same thing. So we might get an ADR hit today on the Euro US, on all the Euro pairs, so watch these Euros. Obviously Euro New Zealand is going to struggle to go long today, because obviously the New Zealand dollar strength, so it's trying, but obviously it's running into a brick wall basically with New Zealand at the minute, but everything else rallying. So yeah, New Zealand, don't know why this move's going. They're just unraveling some positions basically. So nice big move there. Potentially look for propulsion. This is one of the strategies actually we're going to look at in the live room, in the members streams. Might do these next week actually. But basically looking for propulsion gap retest breakouts. Yeah, so I'm looking to add a breakout strategy into my portfolio. With breakout strategies, you can't position trade them because they're breakout strategies. You can only position trade trend or mean reversion. So these have to be stop loss based strategies. But what I'm looking for is narrow range breakout retest type strategies. Prime example. So for a mean reversion trade, you're looking to short this. For a breakout trade, you're looking for the pullback to long. Yeah. So I'm going to be building an EA to test lots of different scenarios to do with narrow range breakout strategy. So this is a great example. Yeah, so we've just broken that high, we've broken that high, we've broken that high. So this is a big strong propulsion move. So it's either going to flag break into one of those three areas, or it's going to pull back into the breakout, which is the propulsion gap retest, which is a 50% retracement roughly. So you always get one of if a breakout is going to hold and work, which roughly 70 to 80% of the time they fail, yeah, which is why the market spends most of its time ranging. If they're going to work, they either flag break or they pull back to a previous level, and that is either usually ties in with a fib ratio, but it's actually usually a previous high. Yeah, that propulsion move you can see there, these two big blue blocks and this big blue block, if this candle continues up there, that whole thing there is one large bank order, which is basically flipping everybody that's short from there long. So that's why that move happens, because the shorts flip long when they see the move going against them, which creates more propulsion onto the move to the upside, which makes the propulsion gap happen, which is why that paints on the chart. So usually everybody that has shorted here and flipped long is going to add back into the longs at that level, which is why propulsion gap retests happen. Yeah, we shorted, we broke a level, we came back in, we added more. Yeah, so that's the breakout sort of retest. So not taking the breakouts, taking retests if they happen. If it retest doesn't happen, it's not a trade, is it? So so yeah, I'll be looking at that anyway in the member streams. New Zealand dollar Swiss. Same thing. We got a long off of the lows here. Reversal alert's gone in. So these are all nice reversal retests basically happening. So you're looking for market structure continuation basically. But obviously, and this is the whole premise of the ADR reversal, you're playing the short into that potential move. New Zealand dollar yen, that's also moving a little bit. New Zealand dollar US obviously moving very nicely. So that's just hit that propulsion gap there. So these three candles together make one big propulsion move, which is the break of that low. The market then re-added into their low. So again, this is all market structure is. Yeah, banks and institutions making large moves and adding more position size to make the trend continue. It's very, very simple. They came back into the previous propulsion move they bought out of again twice. It's all the same stuff. Happens over and over again, has done for decades, and will never stop happening. As long as banks need to make money, they will continue to move the market. As long as they move the market and it moves, you can make money. Simple. So yeah, nice potential reversal starting on that one. US, your guess is as good as mine. This is all about who gets in. At the moment, this move, you know, whenever you see a move like this, we had this 9-day rally. Or was it 11? I can't remember. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days. So we had the 9-day rally, basically straight up parabolic. Unusual to find moves of this magnitude. 9-day rallies are rare. 9-day rallies with candles of this size and this volatility, incredibly rare. Yeah. So, you know, looking back at history, which is all you have to go on as a trader, yeah, when we get up here, that happens. We get up there, that happens. Well, that one's there. We get up there, that happens. We get up here, that happens. Yeah, but these weren't elections. Yeah, that was obviously something completely different. That was COVID. So, you know, this area that we're in here is exhaustion. The fact that they started this move at the beginning of this month is what's kind of thrown most people, me included. Yeah, we started to rally a month before the election. You tend to find rallies happen ahead of elections or dumps happen ahead of elections, depending on who they think is going to get in. This one was a 50-50. So the reason that I'm so surprised about the move on the US dollar is because it's a 50-50. It seems like the market is 100% thinking Trump's in. Yeah, Trump's good for the economy, much better than the other party. So you would expect it to rally. But on a 50-50, which is what it really is at the moment, isn't it? Sort of a few percentage either way. This move is pretty much unprecedented, isn't it? So lovely divergence. Actually, it's not even divergence now. Look, we've actually made a new high on RSI. So it's, you know, it's just unbelievable parabolic move. Biggest I've seen for a long time on this. So yeah, we're looking for a potential very fast collapse, but there is still the potential for this to continue to go. If Trump gets in, that's good for the economy. That's good for the US. It will strengthen the US. Yeah, it'll be good for everything. It'll be good for employment. It'll be good for all sorts of stuff. So, however, there will need to be that paid for somehow. You still have to pay for making your economy stronger, and that typically comes in the form of more difficult trade deals, China being one of the ones which is going to throw a spanner in the works. But the fact that this move has already happened, this is the market, I think, factoring in the Trump win. If Trump wins, that doesn't mean the market is going to skyrocket through the roof further. They've already factored it in. When the result happens, we will likely get the undoing of the move. So they'll be going, see, told you so, sell it, because I've made the money. Yeah, you haven't made the money. When you see parabolic moves like this, there has been no money made by any party. There is a position. Yeah, same way as I have a position in the other way. I'm in drawdown while they're in profit. When they go into profit, when they go into drawdown, I go into profit. Yeah, so when they draw down on their profit, I make profit. That's what mean reversion trading is all about. We are taking the inverse of the move in the fact that we know the banks and institutions have to take profit on their legs. So yeah, just waiting for the move to happen. Obviously, the difficulty with this one is it's an election and anything can happen. So I'm obviously hemorrhaging money on this one this month. Nothing much else I can do about it. So we'll see if we get some kind of pullback. I don't need much, 175 ADR. So a 2 down day move before the elections, I'm done. If that hasn't happened, I will have stops in place in case. That's all I can do, and that will cost me, and it will be hurtful. So unfortunately, I'm over leveraged on the US. I made a mistake. Yeah, it's a mistake I made basically not anticipating it happening a month before the election. A couple of weeks before, yeah. So I assumed I would be safe getting in on this, but it didn't happen. So I'm over leveraged on it. That's why it's cost me this month. It's going to cost me basically all of last month's profit at the moment. However, if we get a 3 down day run today, tomorrow, and Friday, based on the news coming out this afternoon, unemployment's coming out this afternoon. So there is a good chance that if GDP is down and unemployment change is down, that we'll get a negative move starting on that US dollar. If the market sees an ADR hit to the downside on the US, they'll start to exit some of that because they're seeing a potential unwinding coming, and again it will cascade. So there's a possibility towards the back end of this week the market will try to get flat on some of this in case Trump doesn't get in, because if Trump doesn't get in, this move will probably unwind incredibly fast. So there is a good chance that this final 3 days before the run up for the elections next week, we'll start to see at least a partial unwinding on this. If it doesn't happen and we're sitting up here stagnating, we've got to wait. So someone asked in the Telegram, in the Discord group, about exiting. Deal with what you've got in front of you. Yeah. Right now, today, this thing isn't pushing above yesterday's high. If it pushes above yesterday's high today, make a decision. But right now, assume, rightly or wrongly, that this level here, which looks like it's holding at the minute, is going to break. And if it does, we're back down into this range. So then the market needs to attempt to break out of that low through that propulsion move, which was a break of that high. And if it succeeds in that, we've got a reversal. If we've got a reversal, there's a likelihood of a retest and drop by the end of the week. But today, right now, it hasn't moved. So don't make any decisions until you see the market unfolding. You can't do anything. You can't close stuff out today in case something happens. Deal with what happens, not what you think may happen, because 9 times out of 10 you're wrong. So well, not 9 times out of 10, but as you know, a percentage of the time you're wrong. So you deal with what you see, not what you think, because what you think has nothing to do with the market. What you see is all you have to act on. So yeah, there you go. US dollar Swiss, very much rallying, obviously off the back of the US move, but the Swiss franc isn't really doing anything at the moment. So just have to be aware of that today as well, because we've got I'm going to have SMB Jordan was really easy. Schlegel is going to be a lot harder for me to get my head around. When we have changing speakers, it takes me a while to adjust. I will constantly refer back to the old guy. US dollar yen. Jordan's still there as far as I know. I think this is just another member of the board. Trim bets 50. There we go. Yeah, so there we go. Same news. US dollar yen. I'll cover this one in a bit more detail because this is the one that the Japanese are watching. The obviously 150 intervention level is now way surpassed. We're up to 153. So we are basically now, depending on where you class the bottom, and it is there obviously, but we're now well above a 50% retracement on the intervention. That's a lot of retracement, but a lot of this has been caused by the US. So again, you need to kind of treat this as if the yen doesn't exist. The yen is neutral. It's done its intervention move. It's run out of steam. There's no ammunition left. It's sitting there waiting to decide what to do next. This thing is what's going to be moving in the next week. So again, election based, but retracing 50% of the intervention, if you go back and look at the previous interventions, daily chart probably is the best. So go back and look at the previous intervention moves. Normally you wouldn't get a massive 50% retracement on it. Yeah, the last two interventions failed. So it's a difficult instrument at the moment to trade, because the market has used it as a carry trade for, well, going back to 2000, since COVID basically, but always before that. Look, it's been a carry trade. Volatility picked up after COVID massively, but you've always gone long against the yen, because the yen has always had negative interest rates, so you're always going to get a positive carry and a positive swap, which is why they call it the carry trade. It looks to me, after this intervention, which is the biggest we've ever had, that the market is going back into carry trade mode. But what I don't know is whether that is the case, or whether all we're seeing is the US dollar election run up, which isn't anything to do with a carry trade. It's just strengthening the US dollar at the minute. So I think we need to wait until the elections are over and then see what happens with this, see which way it goes. But right now we're well above intervention level. And as I say, I scan the news every day to see if there's anything coming out of the Japanese, because they will always tell us when they're going to do an intervention. There's nothing at the moment. So kind of, again, steering clear. But look at the extension. Yeah. Climbing up the stairs, falling down the elevator shaft. Yeah, climbing up the stairs. We're walking very quickly towards those open doors with no elevator. Anyway. Morning, FTNet. Morning, Mark. Just finished dinner. That's weird. You're in the future. Morning, Neo. So that's all I've got for you today. We covered everything. So, yeah, we'll wait and see what happens today. But ADRs are mainly New Zealand dollar based. Lots of movement on that today. So we'll see what happens. Out of the indices, as I say, I'd much rather be flat today with what's going on with the pound. So I'm out in a bit, and then I will be back tomorrow morning and on Friday, and we'll get some member streams done next week again. So yeah, so members, I'm out at the moment this morning, and I'll be back early afternoon. I'm hoping to get back by 12:30, but I can't do anything about any movement because that's not my control, is it? So whether I watch the budget and watch what happens with the pound, or I'm not here and I don't watch it, doesn't make any difference. I can't really do anything. So won't be taking any trades, but I will spend this afternoon getting the Swiss Army Knife Lazy Trader EA out into the members, so you can have a play around with this. I need to tidy it up and get rid of a load of inputs, because there's tons of inputs in here which are nothing to do with that strategy at all. So I'm just going to tidy it up and clean it up so that it's easier to use. I haven't done a manual for it either, so you're just going to have to kind of read and figure it out. It's pretty self-explanatory, I think, but if you've got any questions, you can always ask in the members Discord. I'll get that done this afternoon. All right, so anything else you need, let me know. Otherwise, I'll be back tomorrow morning. Good luck today with the pound. If you've got any pound exposure on, fingers crossed for your direction. I'm hoping that the pound collapses today by 400 ADR, but that's just me. But we'll see what happens, and we'll look at it tomorrow morning. We'll see what the impact is. And obviously, bear in mind everything else you've got news-wise today. There's a lot of it. And tomorrow morning, if you have got any yen exposure on, be aware of that. Before I come on tomorrow morning, the Japanese yen interest rate release is coming. We're not expecting a change, and if it does change, we are going to get a lot of movement. So watch that tomorrow morning as well. But we'll have a look at that. Unemployment claims tomorrow as well, and then we'll obviously go into non-farm payroll on Friday. It's the beginning of the month. It's non-farm payroll before election, so if they are going to want to make a massive move this week, that's it. Yeah, so if we find we're sitting around on Friday and we've gone nowhere, that could well be a 200 plus ADR day. So we'll have to wait and see what happens. But again, always with trading, you're playing it day by day, so we'll see where we go. All right, have a good day. Anything you need, I'll be in Discord. Other than that, I will see you guys next time. Have a good one.